Hi everybody, today we're gonna present a very important use that is the financial depression. My group is conformed by Alexandra Roman, Scarlett Sopola, Alessa Tapia, Rafael Cruz, Aisa Duque, and finally me. This report will be analyzed the important that have this method in the financial branch and its concept. Today we're gonna present or we're gonna explain in detail how and when using properly. First, we gotta know that this method allows to the company to plan their investment or regulate their assets in the future. Also, they can optimize the taxes burden like the taxes or fees and contributions. And this allow to the companies have a vision more realist of the world.
Companies must depreciate long-lived tangible assets, such as machinery or buildings, as they lose value over the due to use and wear. Depreciation starts when the asset is young and continues over useful life, helping reflect its real value in financial statements. This process is essential for strategic and budget planning. There are various depreciation methods, like straight line or units of production, chosen based on the use asset tax and accounting goals. Proper depreciation improves accounting transparency, supports better business decisions, and ensures tax compliance.
Methods. Number 1. Streamline method is the most widely used method in companies and consists of distributed excess value evenly over in useful life. It generates a constant expenses each year as long as the residual value does not change. Formula. In this method, the formula is annual depreciation expense is equal to asset value less residual value divided by useful life of asset. When it is used applied, when it is made applied, and when the cost of asset needs to be distributed evenly over life, regardless of changes in the use of productivity. Number 2. The sum of the annual digits method. The year's digit method is a form of accelerated depreciation that applies each year expenses at the beginning of an asset's useful life, decreasing from over time. Formula. In this method, apply this formula. Depreciation expense is equal to value of the asset times useful life between some of the digits. When it is used, this method appropriate for assets that often regarded as economic benefits at the beginning of its useful life. Activities such as technological vehicles, computers, and machinery.
Okay, the example case using the Sterling Light method. This is the example, and the data example is acquisition cost 30,000, installation cost 5,000, total cost 40,000, and residual value 5,000, useful life 10 years. So we find the annual depreciation with the formula. The formula is annual depreciation is the same total cost minus residual value divided and life. And in this problem, the data is 40,000 minus 5,000 divided 10 years. Okay, 10 years. This result is 3,500. Okay, and depreciation is 3,500. And now we will do it in Excel. Okay, this is Excel. This is the data. Okay, total cost, total value, useful life, depreciation value. Okay, and years are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And depreciation is 3,500 and repeat. Okay, the accumulated is the accumulated more depreciation. Okay, the accumulated more depreciation, the accumulated more depreciation, the accumulated more depreciation. The result final is depreciation value. Okay, and book value is total cost, and then is book value minus depreciation. Book value minus depreciation, book value minus depreciation, book value minus depreciation. The result finally is residual value. Okay, this is the same Okay, this is the same, this is the same.
Okay, there are different ways to calculate depreciation. The first method is straight line method. Spread the asset cost evenly over its life. This is simple and works when the asset has the same value each year. The two method is the sum of the annual digit methods. It's faster in the early years. It puts more expense in the first year and less later. This works well for assets like computers or machines that have more benefits at the start.
The depreciation is a key tool that shows how assets lose value over time and helps companies plan purchases and replacements. Peru's tax law sets clean limits on depreciation based on asset type and useful life, which aids legal tax planning and investment decisions.